Welcome back to Rockstock Channel. It is Friday, July 25th, and we are back for a long form interview with Q2 Metals CEO Alicia Milne, accompanied for the first time by Q2's VP of Exploration, Neil McCallum. I caught up briefly with Alicia as part of the Fast Markets Live Lounge last month, and also in January at the Vancouver Resource Investment Conference, as she was inundated with warrant exercises following Q2's major Cisco discovery last year. But I wanted to dive deeper today as Q2 had two major announcements in the past week. First, Q2 announced an exploration target estimating a range of lithium mineralization at its Cisco project in the James Bay region of Quebec from 215 to 329 million tons at a grade ranging from 1% to 1.38% Li2O. And secondly, Q2 completed an upsized 25 million Canadian financing yesterday using Quebec's charitable flow-through financing mechanism. The financing at $1 Canadian per share represents a significant premium to Q2's recent stock price. And unusually for TSX Exploration Juniors, there was no warrant attached to the financing, and the financing did not come with a typical 4-month hold period, but rather are freely trading shares. This is important to mention it as there's been some market perception of a potential overhang on Q2 shares, which I think should now largely be addressed with what was essentially Q2's first institutional equity raising. Q2 Metals trades on the Toronto Venture Exchange, ticker symbol QTWO, and on the OTCQB exchange, ticker symbol QUEXF. To memorialize rock legend Ozzy Osbourne's sad departure this week, Q2 Metals stock has been a bit of a crazy train. At 75 cents, the stock is trading today slightly below the midpoint of its 24-cent 52-week low and $1.48 52-week high. QTWO is up nearly 100% from where it traded just 2 months ago, but is still down 50% from where it traded 9 months ago. Quoting ACDC earlier this year, I suggested it's a long way to the top for most lithium equities. But until Trump's Liberation Day earlier this year, Mr. Market for Q2 had been following the traditional Lassonde curve, reacting to exceptional drill results at Cisco. And with a backdrop of improving lithium prices, and with now 25 million Canadian available to drill baby drill, it is not unimaginable that Q2 could double from here and hit all-time highs over the next 6 to 12 months. Q2's market cap is currently 130 million Canadian following the recent financing. Joining me today to interview Q2 is our new partner, Matt Fernley. Please note that Matt, Rodney, and I, and RK Equity are now strategic advisors to and hold interests in Q2 Metals. We are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimers at the end of this video. Q2 Metals has research coverage from Canaccord and Argonaut. If you're interested in seeing this research, please email us at rockstockchannel@rkequity.com. And if you'd like more information about Q2, please visit their website at q2metals.com, where you can register your email to receive their press releases directly. You could also follow Q2 on X at Q2 Metals, as well as on LinkedIn. And don't forget, if you like this and other Rockstock Channel videos, please subscribe, like, and comment on this video, and hit the notification bell to be alerted when future videos are released. And with that, Alicia, welcome back to Rockstock Channel, and a heartfelt congratulations on the strong capital raise this week. Why don't we start talking about that and what you plan to do with the money, and then Matt and Neil can nerd out on the geology.
Perfect. Perfect. Yeah, no, it's been a really busy week over here at Q2. As you mentioned, on Monday we had our exploration target come out, and then we announced a $25 million financing on Wednesday, which we've just actually upsized another $1 million because we had one of our Quebec funds that usually comes in on our financings has exercised a participation right, so we had to upsize it slightly just to include that participation right. So it's now a total of $26 million that Neil gets to spend, and, yeah, it's exciting to see what he'll end up doing with that.
Okay, and, how'd this financing come together, and who were I called this an institutional equity raise. Prior to this, you had, a lot of warrants, in purchasing the Cisco project or other financings. You had a lot of, warrants outstanding, so that cash was coming in through those we mentioned in my intro. But, I don't think this is your first brokered financing, I think.
It is. It is.
Yeah, so where'd the interest come from? If you can name any names, great. If you can't, just at least give us a scope, kind of like geographically, and what percent ownership, the top few groups came in for.
For sure. So, I mean, we have a really good relationship with Canaccord Australia and Canaccord Canada. So it was a rather fluid transaction that just happened. Pretty much, we pulled it together over the last week or so. They had some outreach from some institutions that wanted to participate, and we had already been waiting and watching for a window where we could potentially do a raise, and everything just kind of came together. It was almost a perfect storm with the expiration target happening and then doing the financing. My understanding is that the financing was 4 times oversubscribed. Yesterday morning when we had to go through the allocation list, it was, having to look at it and having to determine, you know, who exactly got what. And I think it's 85% of the deal went to 4 institutions, so we have some good cornerstone institutional investments there. And it's just, in my mind, it's like the natural evolution of a company. Like, for the last 2, 3 financings that we've done, it's always been, a retail list that we've curated over, our sort of history in the markets here. And, everybody's been very long-term supporter shareholders. But, we're at that point where we need to get some sticky money, and there's some long-term shareholders, some institutional money. So, this was perfectly timed.
Well, it's great. It's also great to hear that Canaccord was getting inbounds. Canaccord is out today with a note, very bullish note, saying demand is much better than they expected. 14-page note, calling for one of the first brokers to be saying it's time to be buying lithium equities. And I guess, yeah, so inbounds coming. People were saying companies aren't able to get finance, but quality stories, the market is open, and still for early stage exploration in Quebec. We've been talking about it. Canada generally has not had a very high profile for the past kind of 6 months, with Trump beating up on Canada, and an election with Carney. So but that we've argued that with Sana and Piedmont merger coming through, and Rio Tinto, uh, probably going to make some announcements, about their plans for Quebec, later this year. That it's kind of one of the forgotten regions. But we've had lots of inbound. Everybody we speak to in Australia is always asking us, what do we think about Q2 above anything else? So clearly, there have been a lot of investors circling, awaiting a financing, and I guess the timing was good. Um, the expiration target came out, lithium prices rising. Canaccord thought they can get a deal done, and you got it at a significant premium. The beauty of the Quebec system, right? It was charitable flow through. It's a very significant premium to where you were trading. And there were some people who were suggesting last year or early this year that you should have hit the bid when the stock was, at a buck 48, and do a discounted value, whatever it was. But you got $1, a reasonable amount of money. And so with that, I'll leave it to Matt and Neil. I guess you're figuring out what is the budget, how much you're going to spend, on exploration. Maybe you'll get lower cost exploration, given there are fewer companies now spending for drill rigs, in actually for lithium, but maybe not for gold. But I'll leave that for Matt and Neil to dig into.
Okay. Thanks very much, Howard. And thanks, Alicia. I'm sure we'll come back to you later. Neil, good to talk to you. I should just give a little bit of background to my relationship with Neil. We've actually known each other for just over 2 years now. I first contacted Neil in February 2023 when I was doing an article on Quebec lithium for Battery Materials Review. I contacted Neil as a subject matter expert because in his work, he's been working in the pegmatites in Quebec for what, since 2016 or something, is it, Neil?
Yeah. Yeah.
Probably one of the most experienced exploration geologists in the Quebec lithium space at the moment. And I believe you also pegged the what used to be known as the Corvette project.
Yeah, that one, in Quebec, and then a few others for the precursor to Patriot. Yeah.
Okay, okay. So just to emphasize that Neil is probably one of the most experienced geologists in the lithium space in Quebec at the moment. So let's move on to the exploration target and the Cisco project. Um, a number of sort of inbounds in the last day or so asking why go to an exploration target. So can you just sort of give us your sort of thinking on why you've done that?
Yeah, that's a really good question. I think it's mentioned a few times that exploration targets are not common to be used in the industry in Canada. They're a lot more popular in Australia. So, because a lot of our audience is Australians, they seem to get lithium pegmatites. So that's been something that's been mentioned quite a few times. And also, I think it's important for people to understand just what the scale is of our project. When we put out drill results of 100, 200, 300 or more continuous mineralized intervals, people don't really seem to be understanding just the significance of that. We can say all day how these are industry leading, world class potential, but until we sort of put a tonnage to those meterages, I don't think people really have understood the scale. So this exploration target is a good starting point. You can't call it a mineral resource estimate yet. It's not a good enough quality, a good enough confidence to do that, but it's like the first step in estimation. So we've been doing that all along ourselves as we put it into our 3D model. So yeah, getting it into to something where it's an independent consultant group really underlines the significance of it.
Okay. And obviously sort of exploration target to resource is a difference in the level of certainty. So can you talk a little bit about sort of drill spacings that you've used for the exploration target and drill spacings that you'd have to use for the resource?
Absolutely, yeah. So an exploration target can really be put together on any kind of drill spacing. It's really just connecting the dots on a very broad scale, assuming things connect. And we've done a pretty good job so far of around 200 to 400-meter spacing because we understand how big the scale is potentially. So we need to spread out our efforts to get that understanding. And then we're going to need to fill in the gaps and do roughly 100 to 150-meter drill spacing to get to that mineral resource estimate. And the first one would be an inferred resource.
Okay. And then to get up to measured and indicated, how tight are you likely to have to go for that?
Yeah, we'd likely do 75, maybe 60 meter spacing to get to measured and inferred.
Okay. Okay. And I think if you look at the sort of geographical map slash plan for the Cisco project as it is at the moment, the sort of explored area is quite tight. How much of a percentage of the sort of known pegmatites in the Cisco license area is included in the exploration target?
Yeah, like right now, I think it stands at about half of the area that's mineralized at surface. They're not huge outcrops. Some of them are quite small, but beneath those small outcrops at surface, just because we have lower surface exposure, are some of the better drill results. So We've done about half of the footprint that we see at surface with drilling. So we've got a significant amount of upside left on the mineralized area. So we do need to do two things at the same time. We need to fill in those gaps to build the resource, but at the same time, there's more work that can be done at the exploration level to truly test the potential of project.
Okay. And what sort of depth are you drilling to at the moment, or have you drilled to?
Yeah, typically we're going about 400 meters at most vertically. Some of those drill holes are a little bit longer, up to 500 or 600 meters, but with them being angled holes, the true vertical depth is roughly 400, 450.
Okay. And so would it be fair to say that mineralization is open at depth and along strike?
Exactly. Yeah, along strike at depth, and then there's other completely untested areas right nearby.
And obviously, I know it's a bit of a hospital pass and a difficult question, but any thoughts on what the true width is of the pegmatite?
Yeah, that's always a good question, and one that we're constantly learning about. What is the orientation of the pegmatite? So I'd say in some areas it's 100 meters wide, other areas up to 200 or even 300 meters wide.
Wow. Okay. Okay. So good numbers. And I guess the $64,000 question, or maybe the $20 million question. Now you've got the funds in. How many sort of drill rigs are you expecting to deploy, and sort of when?
Yeah, I think we will start ramping up right away. Right now, we have one drill at the property drilling away for our summer program. But now that we're well financed, it's in our best interest to really hit this hard, to play a little bit of catch up with others that have been, that have been discovered earlier. With the discovery made only in 2022, and we acquired the project in February of 2024. So this is like not even 2 years yet in our hands. So we've got catch up to do. And yeah, we will get up to 4 to 6 rigs probably by the time winter comes around.
Okay. Okay. Um, and maybe just talk a little bit about the mineralogy. I think when we sort of originally talked about this project, you had some big spodumene crystals at surface. What sort of, I mean, again, a really difficult question, but what sort of average spodumene crystal size are you seeing?
Yeah, anywhere around about an inch to 2 inches, sometimes smaller. It doesn't need to be a meter and a half long crystal to be a good grain size to be used in a DMS circuit, which is kind of the ultimate goal. Maybe jumping ahead on your question, I know that's one that's asked quite often is, do you see this as being a DMS flotation type of circuit? And so far, all signs are pointing to that, with it being all spodumene. There's no other petalite or lepidolite or amblygonite that may complicate the process. So with the larger grain size, it's not massive grain size, but it's large enough to be used in that DMS circuit as well. It's primarily spodumene. So we're pretty happy. We've got tests in the lab right now to confirm that with testing. So we'll release that as soon as it's available.
Okay. Yeah, so that was going to be my next question, actually. So that's great. You've answered that. So yeah, okay. Um, I think that's it. Over to you, Howard.
Yeah, Alicia, remind us what percentage ownership do you have of Cisco?
Ooh, good question. Um, right now it's under a we Cisco is comprised of 3 different claim blocks. We own outright the 2 on the side, so we own Broadback and Wagama outright now. It's just the main Cisco block that is under a 4-year option agreement. So we are now at year 2 and we've completed that. So there's 2 more years to go, and there's, I think it's the issuance of 20 million shares left to go.
There's 20 million new shares, to be issued So call that whatever that is, 15 or $20 million in economic value plus, some cash. Obviously, it could be a lot more economic value if your stock price is much higher. But overall, when investors look at Q2, you have a path to own, pretty much 99% of this property for a little bit more dilution overall. Okay. So that's good. Because this, Matt, you tweeted this morning the exploration target, and rank that to actual mineral resources of, essentially Roche d'Or. I think
Yeah,
that's
I mean,
Monono. Is that
I think
Monono, or is Roche d'Or
Roche
different than
d'Or is
Monono?
Mineralization. Yeah, that's the main pegmatite.
Yeah.
I know.
So AVZ, Green Bushes, Pilgangora from Pilbara, Goulamina, which was Moly Lithium, then Leo Lithium, and then Cisco at the midpoint of your low and high ranges, would be the fifth biggest, globally, like above Wagina, and others here. Obviously some of these others like Wagina and what used to be called Corvette, and I'm not going to attempt to pronounce, Shako Juinon, whatever. I did attempt it. Um, Obviously, those resources can be a lot bigger. There's a choice when you stop drilling, to how big it is. So I think those other projects are largely, likely bigger, but nevertheless, at this early stage, anyone who's played or missed, I missed Azor, Andover, that got bought before it was even had a mineral resource estimate, in a hot market by SQM and by Hancock, and Monono. Anyone who looked at the ABZ story before, all of its problems in DRC, and it stopped trading. But, exploration stories for plain vanilla hard rock have a well-trodden path to high investment returns. And as you said, Neil, you have a lot of catching up to do, because your stock did not rise so much given the depressed lithium market environment in which you were announcing your exploration results. But now, again, with the backdrop of hopefully a better lithium market, let's fingers crossed, hope this is sustained. Um, and now you have a lot of cash, and that's 4 to 5 drill rigs. How does that compare to how many drill rigs you had to get to the 40 drill holes that thus far?
Yeah, we only had up to 2 on the project so far in the winter program.
Okay. So when can we expect to see, I guess, new drill results, and when do you think you'll actually put out a maiden resource?
Okay, yeah, I'm expecting the first resource would be the beginning of 2026. We've got 1 rig on the project that's been there since late May of this spring. So, we've got our first results likely being released on that rig mid-August, so a few weeks away.
Okay. And I think we have a bubble chart here. There's always these great bubble charts, apart from Matt's tweet with that ranking. But I think Pilbara and others have put out, where you stand in terms of grade and size. And normally you're not on that map until you've actually announced the resource. But we have put in a hypothetical here, with a minimum, and a max, like where you would stack up visually, in addition to the table that we'll put up here, in Matt's tweet. I guess the thing I'd like to deal with is just the logistics, like where you are. If we can pull up a map of where you are relative to other projects. You're very close to rail, but this is like very important. I know with Piedmont and Sayona, Val d'Or region is very close to rail and other infrastructure, and in a low priced spodumene, environment, how much rail is how much it costs to ship. If it's $50, $100, $200, makes a big difference when the lithium price is low. And I think where you are, it could be materially cheaper. I don't know if you've costed out what your um, transportation costs might be to various routes to market, whether or not you were to sell to China or to Beckencore, or to Corpus Christi in Texas for Tesla, for example.
Yeah, no, we haven't quite figured out the economics of that yet. Um, I mean, we are just 150 kilometers north of Matagami, which is the railhead. So I would assume that that's going to cut our costs in half, if not cheaper than that, from other um, potential producers in the area.
Okay, so I'm going to ballpark. I think that some of the costs might be like $200. You think it could be maybe like 100. Anyway, these are my words. You haven't done that study, but yeah, but I think that's relevant, right? Haulage costs matter. Um, and okay, okay. Is there anything else that you're talking to investors about, Alicia or Neil, that we may have forgotten to ask?
I think we just have a lot of upcoming news flow. I mean, we've been head down working away. Neil's got, his Met work he's got going on. We've got drill results coming out. We've got, we've been doing a regional program on the entire land package. So, just seeing what else is out there. Um, yeah, and it's going to be an exciting fall and winter for us. I mean, with $26 million of flow through money, that all has to go into the ground. So, as Neil said, ramping up to 4, 5, 6 rigs. Yeah, it's gonna be busy, but it's gonna be good, and hopefully we can get a resource on that as soon as we can.
Okay, great. So looking forward to the more drill results and advancing hopefully this exploration target into a MRE. You put out numbers in an MRE that look like your exploration target, and it's hard to believe that your market cap will still be $100 million or 100 US. Anyhow, okay, with that, great. Thanks for doing this on short notice, Alicia, but we did want to catch you on the back of the very substantial news this week, and enjoy your weekend.
Thanks, guys. Appreciate it.